Hey guys, we're heading into another weekend. My name is Mike Munzing with Munzing Mortgage Group. Each week I put these videos together for you to let you know what's going on both in the Orange County real estate market and what's going on with the new changes with the loans, with the mortgages, all the federal items going on with Dodd-Frank and the QMs and the QRMs. Lots going on right now. But be sure to go over to my website at www.mikemunzing.com. The rates for the week. I have my rate sheet on there. It's great to print up, take it with you, take it to your open houses when you're meeting with those buyers, also when you're meeting with your sellers so they know what's going on with the rates. Then again, not much is going on. They've held flat, even though this week ended really strong with the bond market. Rates thus far have been holding flat. Let's see what happens Monday. But print that up, take it with you, talk to them about that. Be sure to send the buyers also over to my online application. When you meet them, I'll be working most of the weekend. Certainly I'll be available with my cell phone, but have them fill that out so we know what they can do. We need to get them ready to go. That is so critical in today's market. With the new debt ratios and all the new changes going on, we need to be sure what they can qualify for so there's no disappointment and you're not showing them properties that they can't buy, or maybe on the rare occasion, they could buy more than they thought they could, which would be exciting for both them and you as well. Okay, let's take a look at Stephen Thomas's report, his bi-weekly report, his first report for 2014. You can find that as well at www.reportsonhousing.com. Let's jump into that. He looks back a little bit at where we were in 2013 on the report here. Once again, you need to subscribe to that so you get all the details, all the charts, all the graphs, all the great information that he offers every other week. Once again, for your buyers and your sellers. But let's look what he says here. He wants to remind us that in the beginning of 2013, that year kicked off with an inventory overall in Orange County. All listings on the market was only at 3,161 listings overall. And that inventory really was kind of bouncing along there at those low levels in the low 3,000 range all the way till the middle of March. But as you recall, in the beginning of March, middle of March, things started really kicking up and they jumped up all the way till mid-October till we had about 6,350 homes. It was a tremendous rally, but what a lot of the market didn't see is just a shift. Now, Stephen doesn't mention it, but as you recall, there was that surge in interest rates. I, as a lender, I, as a loan officer, absolutely saw that. Rates jumped up 1%, 1.5% at a time, and really put the brakes on the market. So you had sellers jumping in with their properties onto the market. You had the rates jumping up, so the buyers are backing off, and people didn't notice that market starting to shift. What also had happened is the values had risen. In some areas of the market, we were hearing 20, 30% in different parts of the market. And what that did is those all-cash buyers, the investors that we all knew about, they weren't finding the deals anymore. So they backed off. The rates had jumped. The buyers are backing off. The market just shifted. And it says the buyers woke up, as he puts it, and they were refusing to pay the higher prices. They still wanted to pay a fair market amount. The buyers are smart right now. They're reading on the internet, they're knowing what's going on. They still remember what happened back in the mid-2000s, and they don't want to do that again. Well, let's look what's going on right now in the last 2 weeks. I think this is going to be one of the last big drops here, but in the last 2 weeks, inventory overall in Orange County dropped another 416 homes. That's an 8% drop in the listings in the inventory in the overall market. Now, don't forget, he put this out a number of days ago. So this really showed the numbers as we crossed over Christmas into the new year. So you had a real off time there. The next report should be interesting to see what happens there. But that puts us at 4,733 homes currently on the market. Next, he talks about demand. Now, for Stephen, demand is considered properties in escrow. That's how he considers demand. Not on the market, but currently in escrow, not sold, but absolutely what they're buying today. And in the past 2 weeks, once again, over the holidays, demand has dropped another 269 pending sales. Some closed before the end of the year and others haven't jumped into the market. So that's down 269 homes or 15%. And that is down to 1,495 homes currently in escrow as we speak right now. It's not a big number. If you look at year over year, last year at this time, and last year at this time, the inventory was 50% less. So with 50% less inventory, we had 26% more properties currently in escrow. So a year ago, the market was a little bit hotter. The buyers are a little bit more, motivated a year ago. So that really tells us where we are. We're hitting a little bit of a lull here. But I'll be honest, in the last week, after getting through the new year, my phone's been ringing more. I've been talking to you a lot, you realtors in the market, and you're seeing some motivation going as well, and that is very exciting. Let's take a look what we have for distressed properties. Now, Stephen talks about distressed properties, and he says that is one of the, I put air quotes, one of the hottest parts of the market. Now, I have trouble with that because he's talking about market times only being 38 days. Well, that's great, but we're talking about a whole county, and there are only 271 homes, distressed homes, short sales and foreclosures currently on the market, and that's down over the last 2 weeks by 27 homes. So that is, it's a number that, yes, 271 homes, if your buyer can find that right property, that's great, but to encourage that, to really have them focus on that would be, or could be, very frustrating. Next, let's look at an important area here, is the expected time on market. I want to look at what he says here. He said the expected time on market for all of Orange County right now is 3.17 months. Now, this is one of the first times we hit over 90 days in quite some time. For homes priced below $1 million, your expected time on the market is 2.6 months. But listen to this. This is where it gets crazy. For homes over $1 million, the expected time on market is over 8 months. And 1 year ago, it was at about 5.2 months. So that's a big jump. So if you got those $1 million properties, it's going to take you a long time to sell those right now. And then he goes into, finally, his forecast, his vibe, his feel for what's happening or what's going to happen in 2014. Basically what he's saying here is that with the slight improvement of the market over some time, you're going to see less government intervention, and that happens in the form of programs and rates. And what that will do is create increased pressure, once again, on the rates. As the government doesn't get involved, they may not be buying the treasuries quite as much as they were, and that's going to push our interest rates overall higher, which is going to put a lot of pressure on the buyers. So that's something we have to watch out for. And then this, as he puts it, will hurt the home affordability for our buyers in the new year. So that is going to be something we need to watch out for. And then he goes over, and let me run down his bullets. He has probably about 7 bullets that he puts for the forecast for 2014. One is that the early part of the year, the still overzealous sellers are going to keep jumping in the market with more listings. He does think that the listings are going to peak this year. We'll see what happens at about 8,500 properties. He's kind of thinking that's going to be the end of August. It's a pretty big, pretty bold estimate, I think. I think he's looking because last year we were in the 3,000s, now we're up in the 4,000s, and if it's a big year, it could be good. Next will be that, let's see, those who price their homes correctly on the market, the fair market value. If a seller comes in, prices his home right, He's not going to be left on the market for the long term, so he'll be able to sell his homes. There's going to be other properties that are left on the market for a long time until they either give up or wake up and get that property off the market. The next thing is, with the increase in inventories and the push from buyers not to overpay, he expects a muted year-over-year appreciation. Now, this is one where he talks about appreciation. I'm thinking that if there's more properties on the market and interest rates are rising, I myself may be predicting a very slight decline or somewhat of a decline. If those rates really do go up by 1% or 2%, we're going to see a fairly drastic slowdown. And if we do have those increased inventories, the only way for the sellers to sell those properties is going to be to drop that price. So I know he's being hopeful. He's being positive by saying they're going to remain flat. I'm doing the math. I'm doing the economics involved. So I think we may see a slight decline on that. The number of successful closed sales will decrease slightly in the early part of the year while those sellers wake up. But as we get further along, we get more properties. He's estimating a nice increase in business in the second half of the year. So we'll see what happens with that. Distressed inventory will remain very low and somewhat unchanged from where it is now. You can't go that much lower, but he's definitely not predicting an increase in distressed. And then finally, even with last year's increase in interest rates, once again, he expects interest rates to continue to climb, as I mentioned before. And that, once again, is why I think the pressure on the price of the homes will increase. Well, this is a fantastic report. It's deep, it's thorough. This is a good one to try to go subscribe to and get. Send him a message, he'll send it to you. Don't forget, he's also got the charts and the graphs and great information. He's got a separate part of the email that he sends out with just one graph after another, about 25, 26 graphs, I think, and that would be very helpful to you and your buyers and your sellers. Okay, one additional chart I want to pull up here, what I found interesting online today, is the unemployment numbers. I know those unemployment numbers came out. People were saying, oh, how very exciting. We've got, 6.7% unemployment. Really? Is that what they're really saying? Take a look at this chart. The lower numbers, I know it's not really to scale, so it's a bit deceiving. I didn't design it. But the lower numbers are what they've been quoting for the unemployment, but the big spikes there, right now up near 13%, that is what we call the U6 unemployment number. Not what they're talking about, but that's the real unemployment number. As they say, unemployment drops to 6.7%. If you don't look carefully, that's because people have given up looking for jobs. They've just given up. Because what they say here is that the employers have added 74,000 jobs for the country for last month. The early expected numbers was about 197,000 more jobs. It was came in drastically lower than what they expected. But also, half of the new jobs were temporary jobs. They were holiday jobs. So this is going to affect our buyers. As our buyers are looking for work, obviously they can't buy if they're looking for work. So this is something we need to be aware of when it comes to our buyers in the upcoming year and the upcoming 2 years in our market. Is this unemployment is going to get us, because it's really 13% in reality. What that is also important with is, as I mentioned last week, this weekend, being elected now on boards and committees, I will be speaking up in LA about the jobs, about the California forecast, about what's coming. This is about a lot of the pressure that I'm seeing coming. It's called the globalization aspect. It's a lot of the pressures that are coming in that are making it very difficult for businesses. A lot of the environmental regulations and a lot of the globalization that they're doing here in California. I was with Mimi Walters, Senator Mimi Walters this morning, chatting with her or listening to her speak as well. And California now has passed the minimum wage laws. That's going to make it tougher for our kids to find jobs, and lots of things going on. I'm trying to stay involved, trying to fight for you, trying to fight for private property rights, trying to fight for what our clients need and our sellers need and our homeowners need to keep their rights within their properties, keep those interest rates somewhat low, keep the tax write-off for mortgage payments. All of that is critical. So I'll be speaking up in LA about that this weekend. That's on Sunday. I'll have my phone with me. I will be working all day tomorrow. So give me a call anytime, 949-689-5626. I'm here for you. I'm here for your buyers. I've been out here 25 years. Real estate lending, this is what I do. This is what I know. I've been in all aspects of the business, and I can really lay things out for your buyers and help get them ready, make the process smooth for them. No surprises. I hate surprises. I don't ever want my clients surprised because that's not good for you. It's not good for me. It's really not good for repeat business, and we want to keep everybody happy. Well, God bless you. God bless your family. God that bless this beautiful country. Have a great time this weekend. We are here in South Orange County. We are here in Southern California, where it is warm compared to the rest of the country. So it's fantastic. All right, have a great weekend. We'll talk to you soon. Bye-bye. Money, 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 money.